I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Great to have you here. Thank you for being here.
Of course, Charlotte, always a pleasure.
Really good to be speaking with you, and I think we have a really interesting conversation coming up today on your due diligence process. But before we go into that, I want to take a quick look at your upcoming event, Commodities Global Expo. So if you can give just a brief overview of what we should know about that, when it is, where it is, what investors should know.
Yeah, of course. Thank you. It's October 20th through the 22nd, and it's going to be at the Four Seasons, Fort Lauderdale, Florida. It's about a 25-minute ride from the Fort Lauderdale airport, probably 45 minutes from Miami. So very close to a lot of investors. That seems to be a pretty popular area for mining in Florida there. And it's a 2-year-old hotel on the beach, right? So like a lot of investors and CEOs are looking at it as an opportunity, not only to get business done, but also to have a little fun. So we'll have some things mixed in where people can choose golf, spa, whatever, and beach, have some fun times, right? But really, I've tried to create something, Charlotte, that's going to be centered around networking and one-on-one meetings with CEOs. I find that many conferences are really not paying enough attention to A, what is the company getting out of this for the fee they're paying? And B, like since they've come down there and spent the time, like what kind of leads are they really in front of, right? I mean, we've done a lot of work screening all the investors that you see on the website. So the website is topshelf-partners.com, which we'll put in the show notes. But if you click that and go to the institutions tab, those are all investors that have been scrubbed by me and my team, right? Those are all people that are 100% accredited at this point as we sit here today. And they want to buy mining stocks. I've actually said on the application, are you actively buying mining stock? And everyone has said yes, right? So like, these aren't people looking. I find I go to a lot of these conferences, especially overseas, and people are like, I'll think about it. Like, we don't want people like that at our conference. If you can't decide at 2,600 gold almost that gold is in an uptrend, then you probably should do something else with your investing money, right? I mean, it's like, this is the time you have to learn how to put positions on, and hopefully clients, don't take that the wrong way. It's just like, we can't sit here as investors forever and say, I'll think about it, right? Like, you have to take action. And I think that's one of the things that we do well at Feneck Consulting is we are actionable. When we see an idea we like, we go after it. I attended a conference last week. I met with 28 CEOs in 3 days. We're not taking 5 meetings in a week, right? Like some companies do, and say, okay, well, yeah, we'll think about it. It's like, we want to meet with as many intelligent CEOs as we can in an uptrend like this, because then we can use that information to our benefit as the rally continues.
Okay, really good overview of the event coming up, and we will have the details in the video description for people who want to learn more. And this really fits in well. This is a great intro to our conversation, which usually we bring you on to talk about what's going on in the markets. But as I mentioned before, this is going to be more of a strategy-focused discussion looking at your due diligence process when it comes to junior mining stocks, including when to buy and sell. So a lot to go into. I'm going to open with a little bit of a broad question and ask you, there's hundreds, if not thousands, of junior miners out there. So when you're starting out looking at all of them, how do you go about first narrowing that field?
The first screen for us is always management. And we don't get that 100% right because there are dishonest people in the world, right? I mean, or something happens to their project they can't foresee, right? That's not their fault. That's just life. There's so many projects you could point to over the last year or two where the jurisdictional risk has gotten more extreme and companies have had to make adjustments, right? Or you have COVID happen and then CapEx at the project goes up and it's now less attractive to the investing public because of that, right? So there are things that are out of someone's control. We look for people that are good communicators. I consider myself to be a good communicator. I get back to people regularly, and I want someone who's a CEO that will tell me that information that I'm looking for, that's public information. Give me an idea of what the press release today really means. Is that meaning that you're so excited by these new holes that you drill that you're going to expand the program? How are you going to expand the program? Are you going to dilute shareholders and take more equity take another equity financing, which would dilute us, or are you going to find debt, or are you going to find like an Eric Sprott? Like Aftermath Silver yesterday just announced that they found another $5 million from Eric Sprott, and he took his position in AAG in Canada, AAGFF in the States, up to 19.2% now. So, that's great. Like when you can find a single investor to give you money where Eric is not selling at 30 cents. Like, I mean, he is looking at this as a long-term investment. Like that's the kind of news that we look for and we share with our investors. So management for us is always paramount. The second thing we look for is the project itself, right? You have to have a good project. I met with Goliath Resources recently, GOT in Canada, GOTRF in the States, and they just keep putting out good news flow. I mean, Goliath has put out 3 press releases in 2 weeks that have said they've upsized their financing 3 different times. I mean, what does that tell you as an investor? Like they're getting more money because their drill holes are coming through, and they've got many, many, many drill holes and assays to announce in the coming weeks. So, as an investor, when you see that kind of news flow that's regular and the news is positive and they're raising money over and over again in a tough market to raise money, like those are all good signs to us. Trying to think of some other examples here. So on the project side, let me think for a minute. Okay, yeah, AbraSilver would be another one. I met with John Mediotis a few days ago. ABBRF in the States, ABRA in Canada. And John has been there at the helm, leading this company from, say, 60 to 70 million ounces of silver now to 252 million ounces of silver. It's like unbelievable under his direction how they've grown. And so, again, what happened earlier this year? They got money from the biggest utility in Argentina. They got a 4% stake. And they got another 4% stake from Kinross. I mean, Kinross has got one of the best, gold charts out there. And Kinross has never been involved in Argentina before, he told me, right? So those are the kind of things you look for, at the project level. Why is Kinross all of a sudden interested? They see that Argentina is getting to be a better jurisdiction. It's not perfect, but it's getting better. And having the largest utility company invest in your company, do you think that's going to help them on their CapEx when they start building the project? Of course, they're going to get good rates and get good direction from a company like that, right? So, yeah, I think very highly of both of those companies. They're both leaders in the junior space. Their charts look good and they're putting out good news. So, number 2, again, is the project. Number 3 is jurisdiction for us. And I'll give you guys some ideas there. The number one thing that I'm looking at in the fall jurisdictionally, well, 2 things. One is the U.S. election, right? And seeing who wins, seeing how that's going to affect, parts of the area here in the Western U.S. where I live. But also looking at Mexico. I think Mexico looks really interesting right now. A lot of the silver companies that are down there have open pit projects. They don't have permits. Some of those names would include Silver Tiger, SLVTF, Sonoro Gold, SMOFF, and Discovery Silver being the largest of the group, DSVSF. All 3 of those are waiting on the new, person in charge, Scheinbaum, to give them direction in October as to how, things are going to roll going forward. That, as we sit here today, Charlotte, in September, is an unknown. Like, no one knows how that's going to play out. I wouldn't say it's 50-50, but it's clearly unknown. And so the stock prices of those 3 companies have been very depressed as a result of investors waiting. But that's why we pick up the phone. We've talked to all 3 of those companies, and we have a pretty good idea of what they're thinking, at least, in terms of what A, will happen, and B, if they don't get what they want, then how do they pivot away from that, right? Like Silver Tiger, for example, can pivot into the underground and still develop the project just in a different way. But you look at their share price, and that's not what the market is saying to you as an investor. It's saying that it's got to happen or else, and that's not true. So, not everything in investing is perfect. You have to do more due diligence sometimes. So that's jurisdiction number 3. And then number 4 for us, close fourth, is share structure. I have seen companies dilute shareholders a lot in the last 2 to 3 years, as the market for the junior sector really hasn't been that robust, right? And they have to stay alive every 6 to 12 months by doing a financing. I get it. But, doing a ton of financing at very, very low prices really frustrates investors because, then you've got an overhang on the stock in terms of warrants issued, et cetera. Meanwhile, companies sometimes take a lot of options for themselves, and now you've got another overhang. So you have to look at this structure as an investor, I say, and ask the company, when do these warrants expire? That is not on many websites. That's a great question to ask, right? And if you get the answer, well, these warrants expire in 2026, who cares, right? It's 2024. That's like way out there, I mean, you can invest with confidence then. But if they say, hey, these warrants are coming due in 2 months, the next question is, what's the price, right? Like if it's close to the current price, that might provide a little bit of an overhang on the stock price currently, but it could also help fund the company. Because remember, when warrants are exercised, that company gets those proceeds. And that just happened with First Nordic, actually. FNM in Canada, FNMCF in the States. Go take a look at their summer news. I believe it was July. They took in over $3 million in warrants. And that's a great situation for an investor because that's just non-dilutive, right? Like as an investor, you're not getting diluted into the ground. And so warrants can be a source of funding. So those are the 4 things that we look at. And we also, I should add a 5th is management ownership, right? We want to see strong hands. Like we'll use AbraSilver as the example because I just looked at their share structure. They have 19.2% owned by Eric Sprott, period, end of story. Like not Sprott Inc., but just Eric. Silver Corp, SVM, has 4% of the float. So now you're at 23.2. I would argue between myself, Michael Williams, the founder, Ralph Rushton, the CEO, a bunch of key investors that I know that are in the stock, that gets you to 30% right there. And so when you get to 30% on a stock, it's really important, Charlotte, because that prevents a takeover, right? You can vote down an aggressive party if you have 30% plus of the float in good hands. So that's one of the reasons Aftermath is our number 2, sober equity holding, is that we see, yes, the capital structure doesn't look perfect. It's got shares outstanding, but when you actually do the homework to look at who owns the shares, that some of these people aren't selling at these prices.
Okay, I think that's a really good overview. We've got 5 filters there, and I think if you start applying those to all the hundreds or thousands of juniors, you will come up with a much, much smaller group. And I think the concrete examples are also very helpful. So I've got one follow-up here, and that is about stage of the company. So even if we're looking at junior resource stocks, they can be at various stages. They might be pre-discovery. They might be doing some drilling. Do you have a place in terms of that metric where you prefer to focus?
Yeah, it's a great question. Right now with gold, 2550, you want to be making sure that you have some producers of gold in your portfolio. And that is if you're a U.S. investor, it's easy to buy GDX, which is the largest ETF, which has a lot of those gold producers in it. Or you can buy GDXJ for the small and mid-cap exposure. I prefer GDX because Newmont, Barrick, Agnico, these are all like solid names that are going to continue to kill with gold at these prices. We're just getting started. I mean, they've put out 3 good quarters in a row. We could interview like this a year from now, and we're going to have 7 good quarters in a row if gold stays above 2,300, right? Like, because their margins are so strong at these prices. You don't need $2,600 gold for these companies to do well. You can just have $2,300 gold. They're doing extremely well. So that's number 1. Number 2, you want some developers in there because developers can turn into producers quicker than you think sometimes. I met with NEXGold last week at the conference. NXGCF is the new ticker. They used to be called Treasury Metals. They had 3 million ounces of gold then. We talked about them on your show at least once before. And Jeremy Wyeth is a really good leader. He has the ability with his team to build that mine eventually. But when you look at when that would happen, it's 2029 to 2030, right? So investors sometimes get frustrated and say, why would I wait 5 years for this? Here's why. Frank Giustra has partnered with, become a shareholder of NeXGold through his transaction that was just announced a few months ago. So Frank, I don't know him personally, but I know his style. His style is very aggressive. He is not looking to just put like 5% position on a company and let it ride. He wants to have direction as to how that company moves forward. And so I think what's happening there is that they could be an acquirer of some small or similar sized companies and then go into production sooner than people think. That's true of other Frank Giustra plays, right? So I'm just taking a page out of his book and saying, if they apply that same methodology to NeXGold, you're looking at a company with over 3.5 million ounces of gold already. What happens if they acquire another 1 million or 2 million ounces somewhere else, and then they're producing in 2 years instead of 5, right? Like that's really what would, I think, be a game changer for them, and we'll see. And then lastly, explorers. We've already mentioned a few of those. I mean, we really like explorers right now because they're so cheap versus some of the other categories. But First Nordic would be a gold explorer. I mentioned Goliath as a gold explorer, etc.
Okay. And so once you've done all of your due diligence, now it's time to buy. But you've told us in many conversations in the past that you shouldn't buy all in one chunk. You should do that in tranches. So I'm hoping we can go into a little bit more detail about that and look at, how many times do you buy? How do you space that out? So what is your process there?
Yeah. My process is different than just about everyone that I've talked to in that we admit that we can't get it correct all the time on the entry point. I don't really think anyone can, but at least we're being honest about it. Therefore, we buy 6 to 10 times over a given year, usually. And by that, I mean, I'm not putting like 50 grand at a time into a name. I'm putting, 5 grand, let's say, into a name at a time. And that way, number one, I don't move markets. And number two, my followers can follow me into a stock and they won't have a huge, move in the stock that they have to chase, right? A lot of newsletter writers will put, or influencers will put bigger positions on, and then it gets crazy, right? Like when Eric Sprott put that 5 million in the other day on Aftermath, it was up 8% in like 2 hours, right? It's like, it's hard as an investor to chase that kind of stuff. You have to develop patience, and that's why it's a virtue, right? It's like, it's hard to be patient in mining sometimes, but I think that patience really pays off. So yeah, I mean, does that answer your question? Or
I think that gives a good overview of kind of how you do it and the specifics there. So the other thing I wanted to ask, so once you are in the company, you have your position, what is your process then for monitoring what's going on? So of course,
Sure.
When you put money into a company, you've got a reason for doing that. You're looking for particular milestones. How do you make sure that you stay up to date about what's going on? And how much leeway do you give when maybe things are going in a direction that wasn't planned or you're not a fan of?
Yeah. So the first part of the question, we monitor and fact check ourselves through phone calls, usually with CEOs directly, which I realize is not going to be appropriate for everyone listening. But that's why you hire a service like ours, because we're doing the work. We actually put out a lot of good news, both through our newsletter, the Feneck Commodities Report, as well as our real-time email update service, where today on a Fed day, we emailed 2 different times 3 times. We emailed 1 minute after the Fed decision. Then we emailed right after Powell got done talking. And then we emailed a 3rd time saying, here's some other things to consider about what he just said about CPI, inflation, that is, what he said about unemployment rate remaining around 4.4%, et cetera, right? So that's more of a robust service for people that are wanting real-time info, which I think is very, very valuable in a rising market like this. But how we monitor it, to answer your question, call the CEOs, get information. If we can't get a CEO, we talk to an IR person, investor relations. And then how do we make decisions on when things have changed? Well, when I see a CEO leave, I'm always interested as to why. Did they really want to retire? Were they pushed out? I'm not going to name names, but it's not always what you think in the news release, right? So I want to talk to someone on the board or someone like that to give me the straight scoop. And I'm not going to blast it out there on a bunch of, boards. I'm not going to do that, but I'm going to say to myself, okay, this really wasn't what I was expecting. I was expecting this person to lead the company. Now I've got someone new to get to know. And sometimes that could be enough for me to sell. One of the major things that I sell on is when a company's approaching the PFS stage, they then have to put a document out that's extremely robust, showing all of where the bodies are buried, so to speak, right? And sometimes you read that through and you're like, wow, okay, this is going to be way more expensive to build than I thought. And then you decide to sell that because, there's going to be a lot of people gaming that stock the other way and shorting it and playing games with it. And that's not the fault of the company. Let's be clear. It's just, I didn't expect the cost that we call that CapEx on a project to say go from 200 million to 350 million. That's a 50% increase, or actually more than that. So it's like, wow, I didn't expect that to happen. And how are they going to raise that additional capital, right? That's the problem with mining in general is we don't have people writing big checks yet. Eric Sprott, yes. Rob McEwen, yes. Robert Friedland, yes. These guys have all been hugely supportive of our sector, but we don't have 100 of these guys. We have a handful of these guys. And so it's then dependent upon, investors, private equity firms, financial advisors to step up with checks. And we're getting there. Like the sentiment at Beaver Creek last week was like, I talked to maybe 30 junior CEOs and maybe 12 of them had said, independent of each other, we're getting circled by people with more money and bigger companies like the majors than ever before, like way more. So that's really, really positive. That's what we need to see in our sector is outside investment, stepping up, seeing the value in gold, and then smartly asking, how do I play this? And usually that's through equities.
Okay, and then a little bit more on the exit process itself. Are you, again, similar to how you're buying in, going in stages, or how does that typically play out for you?
Depends on the news. Like if I see, let's say Gatos, which just got bought by First Majestic, right? That wasn't a huge premium deal. I think it was a 16 or 17% deal. So if I'm a Gatos shareholder, then you have to ask yourself, do I want to be a First Majestic shareholder? And if not, then you have to sell your position sooner than later, right? Because that will eventually get proved and you're going to become an AG shareholder. So sometimes I sell there once I get a premium takeout. You saw Osisko Metals get taken over for a really nice premium recently. So we would take that premium off the table and then reassess, after the fact. But really get how we usually do it is tiering out of a stock so we don't cause disruption. I'm an advocate for the space. I don't want to, if I have 1 million shares of a junior, right, the last thing I want to do is blow it into the market all at once, because then not only does that happen and hurt the stock, but then I have to disclose it to my followers that I did that. I think that's fair. And then more selling comes, right? And so what we would tend to do if we really wanted to get out is call the company, try to work with them on a strategy for exiting the stock over a few days. Maybe they've got buyers, right? Coming back from Beaver Creek, they probably met with a lot of high net worth buyers, and they may be able to find someone that could take our trade for us and do what we call a cross, rather than just us selling into the market, which really isn't fair to a junior a lot of times.
Okay, really interesting to go through that. So I think we've gone from the due diligence to the buying all the way to the selling. That covers the topics that I wanted to go over with you for today. But do you have any final points to add, maybe in the context of the activity that we're seeing in gold recently, which makes it quite an exciting time for people to start considering this if they're not already?
Sure. So I would encourage people to go back to the last major rally, which is undisputed, right? That was 2011, 2012 in gold equities. You're going to notice Newmont was trading much higher than it is trading at today at $51. You're going to notice juniors like, 1911 gold had a market cap of nearly $1 billion Canadian. They're trading at a $20 million Canadian market cap today. How is it so low? Well, there's a number of factors that go into that answer, which we're not going to discuss today. But I would just say, as value managers, we look at these kind of charts and say, let me call Sean at 1911, or let me call the senior guys at Newmont and get a better understanding of what their reasoning is, right? Like, why not ask the company, how did things change so drastically where gold is up like $1,000 higher than where it was in the previous peak, and yet your stock is lower, right? I mean, it doesn't make much sense. Sometimes it makes sense based on news flow, but it's just a tremendous opportunity right now, Charlotte, to where there's a lot of gold equities not trading at the value where they should be, in the market. And it's going to take, I think, as we've talked about many times on your show, for the broad market to turn over to get people to really recognize this, because I don't see gold like so many people do going from 2,550 back to 2,000 or 2,100. Like, that's just not happening. We're holding 2,300 now for weeks. Doesn't mean we don't break it, but I mean, that's a really bullish chart pattern. So I think gold is in an uptrend. It's in a sustained uptrend. And that's why you want to keep looking at gold equities in particular, and then drill down to things like silver, where we have a lot of expertise as well. Silver, just looks really, really strong here, over $30 an ounce. It's the last time that you and I interviewed, which I was saying on your show was major resistance for 11 years, right? So like the fact that it's now there a second time this year is very encouraging. And that's why we're, starting to bottom fish a lot of silver stocks.
Okay, I think we'll wrap it up there for now, but this is really good. I think really useful for people to go through the steps and with the examples, as I mentioned before. So we'll have you back soon, but thank you for taking the time today.
Of course, Charlotte. Thanks a lot.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.